What's going on, guys? Welcome back to Counter Trend Capital. It's your boy Tim Aslan here, and today I wanted to make a quick risk management tutorial video. I have one of these on my personal channel, but I still get questions after, so I think I'm going to try to explain it better on here. Now that we have this new channel, I think it'll really help a lot of you guys, and I still get a lot of questions about my risk management technique using high leverage. There's this big misconception around using high leverage that it's dangerous, you're gambling. I hear a lot of things like that, so I wanted to squash that and essentially show you how I do it responsibly and professionally. And you can ask forex traders as well. I mean, they're using 1000x leverage in forex, right? Because the moves are so small that you need the leverage to make it worthwhile. So same thing here. Using high leverage allows me to take advantage of smaller percentage moves, like 2, 3, 4% moves. We do swings, right? So we're holding our positions for a few days to a week, maybe longer. So this allows us to really take advantage of those, 5% moves on Bitcoin. And then for altcoins, we don't use as high of leverage. We use like maybe 50 to 60x leverage. But that's because alts move a lot bigger in percentages. So, I just got a price alert. Dogecoin is dropping. Happy 420, by the way, everybody. Thanks to all the people that said Dogecoin would pump. My shorts are doing very good today, so thank you for that. But anyways, back to this. So what you're going to do, and I'm going to try to explain this as simply as possible. I'm on the BitGet platform. I loaded up a fresh demo account with no trades right now, just to keep it clean for you guys. So there's about 1400 USDT on this demo account. I wanted to get it to like 1,000 to make it a nice round number, but this will still work. This is on BitGet again. The main exchanges I recommend for futures trading is Binance, BitGet, Bybit, and Mexi. KuCoin I don't think is good. I personally like BitGet just because that's the first one I used and I found it really simple to use. So I like it. But keep in mind, none of these exchanges are really allowed in the US. So you'll have to use VPNs on them. And if shit hits the fan, there's always a risk that you can't pull out your funds. That's the risk you take with exchanges. So just keep that in mind. Always be ready to pull out if you need to. So keep that in mind. But all exchanges will work similarly to this. They're going to have an isolated and a cross leverage. If you don't know the difference, isolated means if I put $50 into a trade, my liquidation price will be higher than it would be on cross. But if I do get liquidated, I'll only lose that $50 I put in. So whatever you put into the trade is the maximum amount that you can lose. Now this sounds good, but it's not, because your liquidation price will be so high that you don't have enough room to ladder into your position. So I'll just show you a very quick example. Let's say I'm on isolated and I put, let's say I put 1% of my position, so $14, 1% of my account. Let's say I do that. My liquidation price is $27,166. Okay. Now I'm going to close that. Just remember that 27,000 number. Let's switch over to crossed. And by the way, your leverage is right here in the top right. I'm using 100x. Now we're on cross leveraged. Cross leverage uses the remaining USDT that's in my account as collateral. So I'm going to buy long. Liquidation price Never. So I'm never liquidated on this position. Now there is a misconception though. It's like, oh, okay, you're never going to be liquidated. So why not just hold this long forever? No, because if the price drops 10%, I'm on 100x leverage. That's 10 times 100. That's going to be 1,000% drop. So I can lose more than this initial $11 that I put in, right? So I would be down, let's say, pretty much 10x, right? Because it's a 10% on 100x move. So I'd be down like 110 USDT on this position if we drop 10%. So when you're on cross leverage, you just simply use your stop losses. That's all you need to do. You look where you enter, you have your invalidation point, and you put your stop loss. I never really use a stop loss more than 3% on Bitcoin. So that means the most I could lose is 300% because we're on that 100x leverage. And for a $15 trade like that, that would be 3 times the amount. So it'd be like $50 almost. If it's like a $15 trade, for example, there was some fees that were taken out for this. And you guys are thinking, oh, it's only a, $15 trade. Like, is that even worth it? And it is worth it because if we move up 5%, you're getting a 5x on this amount, right? Because we're on 100x leverage. So whatever normal gain it is, a 5% gain is 100x times that. So this $15 position, now $12 after the fees, at a 5% move would be a 5x. So you'd make $75 for a 5% move, and that's only with 1% of your position in, right? So it really adds up. It just looks small, and that's why it's addicting to use more than you should, because they make this huge ass scroll bar right here, and nobody wants to be barely moving this scroll bar. It just doesn't look satisfying. So people move this like all the way here and long, and will lose that money because that's terrible risk management, using 35% of your capital in one trade, right? So you want to just move this scroll bar to a maximum of 3%. I never, ever, ever like to use more than 5% of my capital in one trade on 100x leverage, right? Now, I generally do 2% or 3%. Now, if it's a bigger swing trade, I do a ladder method, right? So what a ladder method is, let's say I wanted long down here, okay? Let's say we do a trend-based fib, and I don't think they're going to be correct on here. Yeah, so I usually use TradingView for this, but let's just put on the 1.23 and the 1.618. Okay, the rest we don't really need. Oh, there's already 1.618. So let's say I think that this is an ABC correction, which I mean, I don't really think it is. I think this is more of a leading, and I'll make an update video later today. But let's say I did want a long here. So, and I wanted it to be a swing trade. Here's 28,000. That will be my first entry. So at 28K, when we get there, I'm going to go 1% market buy as soon as we react off of this 1.23 fib. Now, after that, this might moon. Let's say it does. Okay, that's fine. I'm going to make some decent profit. Right? This is a smaller account, but you'll still make, you'll probably make 150, 200 bucks if we break the high with simply 1% at 100x leverage. Now let's say we go to the 1.618. Now I'm going to go and add an extra 2% to this position. Now, instead of my original entry being right here, because I added 2%, which is double the 1% entry, it'll bring my entry probably right here. Okay, if I used another 1%, it would be right in the middle. It'd be the average of it. But I used more than 1%, so it'll be closer to the lower entry. Now for stop loss, in Elliott wave theory, we usually use the 200% as the stop loss. So I would put my stop loss right here at 26,600. This isn't the best risk to reward trade. You'd lose 3% for a 12% gain. Okay, I guess that is pretty good actually. It just looks misleading on this chart just because it's so tight right here. So that is a good trade actually. Now, because I used cross leverage, I don't have to worry about liquidation, and I can simply ladder into the position and get ready for the bigger swing. If I do get stopped out, it sucks, but I won't lose that much because I simply used a total of 3% of my available capital. Now, this is what I need you guys to really understand. It's not about the number of leverage you use, right? I can do the same thing with 50x leverage, but instead of using 2% of my portfolio, I would simply use 4% of my portfolio because I divided the leverage in two so I can increase the percentage by a multiple of 2, right? And it adds up to the same exact amount. That's what people don't understand. I don't have to use 100x leverage. It's just nice round whole number with 2 zeros. It allows me to calculate position size a lot easier. But you can use 25x leverage if you wanted to. Now, if you use 25x leverage, I would, instead of using 4%, I would use 8% of my total balance. And guess what? It adds up to the same exact position size, guys. That's what you need to get into your head, because all you simply do, let's say you're using the 50x again. If you use 50x at 4%, your cost basis is $54, right? Out of this amount. Now, if you use 100x at 2%, it's 27% cost basis, but it's actually double that because of your leverage, and it adds up to the same exact amount. So next time you see anyone using super high leverage, understand that they're using a smaller position size and they're not just being degenerates aping in. Sorry, I had to rant a little bit. But what I want you guys to understand is the most important thing in trading is not what leverage you use, it's what risk to reward you use, right? So for example, on this one, there was a 3.3% risk for a 12% gain, right? That's a risk to reward ratio of about 4. So you can take that trade 4 times, lose 3 of them, but win the 4th one and be profitable. That's how you become a successful trader. I am not winning 100% of my trades. I'm not winning 90% of my trades. I'm not winning 80% of my trades. Well, this month I am. But that's not the point. The point is you just need to win more than 50% of your trades. And if you use the correct risk to reward ratio and responsibly use leverage, you will be profitable. The only thing stopping you from being a profitable trader is your ego and your greed. So you need to remove that completely and use your fucking brain. Okay, guys? Use your brain. It's math. It's very, very simple math that you guys have access to. So stop being lazy. Learn how to do it properly. And let's make some money, guys. Okay? Leave your questions in the comments section. Tag me on Twitter. Whatever you want to do. I'm happy to help you guys. I really am. But I keep seeing people losing money because of poor risk management. And it's really not that hard, guys. It's just simple numbers and simple math. Anyways, I'll see you guys in the next video. Have a wonderful day. And take care.